Silver's price has exploded to record highs over the last year, driven by a rare combination of softer inflation and rate cut hopes, years of supply deficits, and surging investment and industrial demand. What began as a steady climb in 2024 turned into a full-blown speculative rush through late 2025 and into early 2026. Silver is now in the middle of one of the most dramatic bull runs in its modern history. In roughly a year, the metal has nearly tripled, with front-month futures and spot prices recently trading in the high $80 per ounce range after smashing through a series of all-time highs. Many analysts argue this is not just another cyclical pop but a repricing of silver in response to deep structural imbalances in the market. Over the past several months, silver has repeatedly broken records, first crossing $60 an ounce, then $70, and more recently driving toward the $80 to $90 range. In late 2025 alone, prices jumped more than 25% in December and finished the year around the low $70 area, leaving silver up roughly 140 to 150% versus the prior year. The rally has stayed intense into early 2026, with front-month futures and spots sometimes rising another 2 to 3% in a single day, bringing the total increase to nearly 200% compared with a year ago. Volatility has surged as this move has unfolded. Intraday swings are now large enough to trigger stop losses, margin calls, and forced buying from systematic trend-following strategies, turning ordinary up days into powerful short squeezes. Each fresh breakout to new highs pulls in momentum traders and options speculators, further amplifying the swings on both the upside and downside. Several short-term catalysts are driving the latest leg of the rally. Recent U.S. inflation reports came in softer than economists expected, convincing markets that the Federal Reserve is likely to start cutting interest rates sooner and more aggressively. Lower real yields and a weaker dollar typically support precious metals, and silver is riding that macro tailwind alongside gold, but with far more leverage to shifts in sentiment. At the same time, risk appetite in equity and credit markets remains fragile, prompting many investors to rotate into perceived safe haven assets, including gold and silver. Once silver broke above its previous records, a wave of stop-loss buying on short positions and rule-based trend strategies helped push prices sharply higher in a relatively thin physical market. The result is a feedback loop where higher prices attract more attention and fresh capital, which in turn pushes prices still higher. Beneath the daily headlines, the deeper story is a structural supply deficit that has been building for years. Since around 2021, global silver demand has exceeded mine production and recycling by hundreds of millions of ounces, creating a cumulative shortfall approaching the equivalent of nearly an entire year of world output. Because most silver is produced as a byproduct of mining other base metals like copper, zinc, and lead, even a big jump in price does not immediately bring new dedicated silver mines online. The strain shows up clearly in inventories. Exchange and vault holdings in major hubs have been drawn down aggressively, with COMEX registered silver stocks falling by roughly 70% from their 2020 peaks in London and Shanghai inventories also sliding to multi-year lows. More recently, COMEX data have shown persistent large withdrawals and relatively few new deposits, highlighting just how tight the physical market has become. Demand is booming on two powerful fronts, monetary and industrial. On the monetary side, investors seeking protection from inflation, fiscal deficits, and geopolitical uncertainty have ramped up purchases of coins, bars, and silver-backed exchange-traded products. Retail participation has grown so strong that CME Group is rolling out a new 100-ounce silver futures contract aimed at smaller traders, following record volumes in micro silver futures during 2025. On the industrial side, silver is riding long-term trends tied to the energy transition and the digital economy. The metal is a critical component in solar panels, electric vehicles, advanced electronics, and data center infrastructure, all sectors experiencing rapid expansion as the world electrifies and digitizes. This dual identity, as both a monetary hedge and an industrial workhorse, means silver is drawing capital from traditional precious metal buyers and from investors positioned for clean energy and technology growth. Taken together, these forces create a kind of perfect storm for silver: easier money expectations, persistent supply deficits, collapsing inventories, and surging investment and industrial demand. The recent price spikes and intense volatility reflect a market that is struggling to ration scarce physical metal while absorbing waves of speculative and hedging flows. Whether silver stabilizes at these elevated levels, overshoots dramatically before correcting, or enters a more prolonged consolidation phase, this rally has already changed how many investors think about what this metal can be worth in a world undergoing rapid monetary and technological change. If you found this analysis valuable and want to stay updated on silver's historic rally and other market moves, please hit the like button and subscribe for more in-depth financial coverage.